It is officially Christmas. It is here, but not really. It is election season. Some of the times when the governments are a little bit uneasy, they're going to shower gifts upon all of its constituents. And it's up to you. Maybe you can get a couple dollars. Maybe I can get a couple dollars. They are definitely throwing out the goodies. So let's see if it is appropriate for you. And stay to the end of the video. We're going to show you how you can make $200,000 in 180 days guaranteed. So just fast forward to the end if you want to know. But in the meantime, let's get into what we're talking about today because, guys, like I said, Christmas is here. It's in advance. And so what were we looking at? Just go to this website, Office of Superintendent of Financial Institutions. I know what you're going to say, boring. I agree with you. But these are the guys that run the banks. They're the federal regulator of all the financial institutions. But remember this domestic stability buffer. What is that weird word? 3.5%. What that means is the amount of money the banks have to put aside and not lend out as in mortgages in case something goes down. So what happens if something does go down? I don't know. Is it likely or unlikely? You could always go to the website. I found it very funny when I rolled there that they have the capacity to respond to severe but probable scenarios. So I'm wondering what on earth they're thinking about. Anyway, what we're talking about today is the minimum qualified rate for uninsured mortgages. This is the plus 2% that always gets people when they're buying a new house. So imagine you're going to buy a new house and the new house, let's just say the interest rate is 5% today. When you go to get your mortgage, they're not going to give you the mortgage for 5% and that's your maximum amount. No, they pretend that it's 2% higher than the 7%. My family, they would call it a fudge factor, a little bit of like extra wiggle room. If you get in trouble, someone loses their job, that extra amount. Now, that does not exist, right, on uninsured mortgages always, but it really depends on the situation. But let's talk about this one scenario because remember, we have to, in Canada, is different than the United States. United States, 30-year fixed rate mortgages. We don't have that. Australia, New Zealand, England, all these other countries, 5 years coming up for renewal all the time. So when you renew, do you have to do the stress test? Well, no, you don't, but maybe you do. So let's share my screen with you here. And I want to just give you an example of what kind of legal extortion has been going on. I find it's absolutely like reprehensible. So let's just take two Canadian banks for no reason whatsoever, but TD and BMO, for example. Let's say that currently that you have a mortgage and it's coming up for renewal and TD offers you something, let's say 6% maybe, okay? Say they're going to offer you 6% on your new mortgage on your renewal. And you kind of get excited about that. You're like, great, I got a renewal. But that's not the rate I like because BMO is offering me 5%. So here is the difference. You would say, well, I want TD, I want you to match this 5%. I'd like you to at least do the same as what I'm getting over here. And they say, well, if you move, BMO has to do the stress test now. And so if they do the stress test, you have to qualify at 7%. So you're better off just paying us the 6% because then you can qualify for more money. So you'll qualify for more money because you don't have to do the stress test, but they're still robbing you for 1% Remember, 1%, what do you remember that is? That 1% is 10% of the value of your home. This is a big difference for them to rob you of that money. So finally, they have recanted. And so now when you're going to renew, it means you could shop different banks and get them to compete for your business without having to go through the stress test. Is this going to be helpful for you? This is mad helpful for you. You could save a lot of money by doing it that way. So you're going to be able to get much better rates and you can move between lenders to get them to compete for your business. This is great news for everybody. So sometimes there is a change that happens that is great news. Remember, this isn't increasing risk out there. Those loans have already been made. The homes have already been built. Why didn't they do this a decade ago or many decades ago? I don't know. It's the government. We don't know. So listen, I'm extremely excited that they would even think about something like this. So this is wonderful. Now, they're worried. The government is very, very worried about the state that we're in right now because home prices cannot go down. So OSFI finally has relented on these stress tests on uninsured mortgages when we switch at renewal. Please go check out this article if you want in the Financial Post. It's very, very important. But as you can see, if we just pull up TD Bank's rates, you can see that if you have a high ratio, which means an insured mortgage, the rates are lower than if you just have a fixed. And why is that? It's very, very simple, because if you have an insured mortgage that is guaranteeing the payments to the bank from the government, if it's guaranteed and they have that extra insurance product, they're willing to lower the rates for you because it's insured. If it's not insured, of course, you're going to have higher rates. So now you can compete for this exact same thing, which I think is absolutely wonderful. Now, one thing we're going to have to pay attention to is, why are they doing this? I think it's important to know, why are they doing it? And it all was said in an interview that was done by our prime minister. Let's share this with you, and I want you to hear straight from the horse's mouth, as we say. See what he said.
But housing needs to retain its value. It's a huge part of people's potential for retirement and future and nest egg. Yes, we need to keep housing stable.
I mean, that is exactly the reason why. Housing prices are based on the loans that they can get and the amount of money that it's worth. And he says this is people's retirements. Remember, the governments used to say, and this isn't just one government, this is all governments of the world, we need affordable housing, affordable housing. Notice that they never say those words anymore. They'll now say the words like achievable or possible. And now they're not even talking about housing. Now they're talking about, well, you can own a shed somewhere or a basement unit somewhere, or that you could rent somewhere. They don't even talk about, in most where most people live in the big cities, they don't even talk about it being affordable anymore. So I think it's important that we keep that in mind. Now, we're also going to take a look at some of the overall prices that are going on right now. So if we look at CREA and AREA, and we go back in time, this is going back 20 years. These are the big markets of Toronto and Vancouver, where the majority of people in Canada live. We could see that the lines are up and to the right. Of course, they squiggle up and down based on different things that happened. Back in 2017, it was regulations about foreign buyers that were coming into the country. They were going to limit them. And of course, the 2020 and to 2022 shocks that we had. But this map here is giving you an idea of where we are, but this is also describing the problem. So let's look at something right here. Let's go back in the average prices in my region, in the Greater Toronto area, and let's just go back like 4 years, maybe something like that. Let's even go back 5 years and see what the average prices were, because that is the term that it takes for people to renew their mortgages. Over 90% of people are in 5-year mortgage products. So remember, if they sign this back, let's even go back farther, you guys. Let's pull this price back farther. And now let's imagine last year was 2023. People from 2018 were purchasing at that time. So let's just pretend that you bought in 2018. The average price was $732. And you were renewing over here in 2023. The price now is $977. Your property went from the 700s into the mid 9s. You still made a lot of money. Those are not the people that are in trouble. Who are the people that are in trouble, you guys? These are the people that bought at this giant peak. So let's just say, for instance, you bought in 2020 and your property price was 900. Now moving on, in 2024, your property is only worth 900. So you're not up any profit. You have no profit in your home. You may be upside down because you may have borrowed more in 2022 and 2021. So what happens if you bought the property at the peak, right at the end of 2021 and 2022? Your properties were worth almost 1.3 million, and currently the properties are now below $1 million. So those people, remember, those people are the ones that are in trouble. The ones that purchased homes in 2020, mid 2020 to the spring of 2022, just in that 18-month period. Those people bought those homes at the peak, and now those prices have come down. When they come up for renewal, they're going to be underwater by a huge amount of money, a lot of money. Those are the ones that will not be able to get mortgages, that are going to be in trouble. When do those all renew? We all are good at math, right? Add 5 years. That means spring of 2025 to fall of 2026, that is when people will be running into big, big problems. So we all think that they're lowering rates right now in anticipation of that. No, they're not. Governments are in turmoil right now. They're trying to hand out some goodies. OSFI is now doing the rule changes, not because of what they're seeing that's coming in the future. When have you ever seen a government proactive about anything? All governments of the world are always behind. They're doing it because there's a fire burning right now within the governments, and there's a lot of arguing going on. Remember, the biggest problems are going to come later. So now that these gifts are being given out, I want you to take this to heart and really, really, really use it to your advantage. So start shopping around for your renewals and be prepared. This isn't the time to be spending every dollar that you can. I also said to you guys, I wanted to show you one extra thing for you. If you guys are interested in making $200,000 in 180 days guaranteed, this is what I want you to be looking at. Go to sellhigher.ca. This is where Bill 23 has helped us out a lot. We can now put 4 units, 5 units, sometimes 3 as a right, depending on the town that you're in. If you're anywhere in the greater Toronto area, we are building. And if you are going to be in Alberta or BC, put your name on a list, sell us, send us an email. And because we are going to be moving out that way as well. What do? We buy properties for 15 to 20% over market value. So if you have a home worth $1 million, we'll give you $1,150,000 and in 180 days. And what are we doing on these properties? We are building, you can look right here. We are building multi-residential units. We're doing them by modular units. We're putting them in a factory. You can watch a couple of videos here and an explainer video. After you watch that, you could book a time to talk with me just at the bottom. Of course, this is no obligation. This is absolutely free. So please, you guys, make sure that you're doing everything you can in this market to stay safe, because we haven't even begun to feel the pain. I'm thinking the World Wrestling Federation when I was young, feel the pain. Top rope, one of those things. The pain is coming 2025, 2026 on that renewal cycle. Just pay attention to what they're listening to at the bank. And these rates will continue to be dropping as they're going to try to save the real estate market. Now, this isn't happening everywhere. Of course, the cheaper markets are doing very, very well. The markets that are in trouble are the big markets, Toronto, Vancouver. Let's go to the States, New York, San Francisco, Chicago. Those places are going to have some serious trouble. If you wanted to, let's just see if we could pull it up just while you're here. I showed you they're always up and to the right, correct? So let's just add Calgary into this and let's see where we're going. Let's see if it pulls it up. So as you can see, Calgary, where were the prices in 2020? They were 400, and now look at them. They're at almost 600. They've gone up 50%, whereas the properties in Toronto went from 1.3 million down to 1.1. So that is the big, big difference. And this is the same going to be repeated in all the different countries. The markets that have good inflow of people, a lot of jobs, those prices will continue to go up. And the higher end markets that always had, I would call them like legacy cities that have had for decades, all these people moving in for jobs, this isn't going to be coming back anytime soon. We're going to be seeing some real fireworks 25 and 26. Anyways, you guys go check out sellhigher.ca, and I can't wait to talk to you soon. Have a great day.